So if you watch me on a daily basis, you're either a mortgage advisor, you're a realtor, or you're a consumer looking to buy. So if you're a consumer looking to buy, well, I got some kind of good news for you today. Mortgage rates are easing, and they're going to continue to ease. The headlines that we're seeing this morning are right through here. Private payroll growth slows to 152,000 in May, much less than expected. So that is the pivot point for today. We're going to focus in on that because why? Well, that's what the Federal Reserve wants. And then I'm going to get into a little bit of a contentious area. And it is the price of things don't have to go down. A lot of people are saying, okay, house prices don't have to continually go up. Well, I hate to beg the differ, but if we look at even wages over life, they go up. You look at prices of other investments. Why do we invest? Well, we invest to take our hard-earned money and to put it into an investment so we can kind of outrun inflation. Inflation is usually about 2.5% throughout history. And so we invest in things to gain that purchasing power. So you got to think of what's inflation. Well, inflation basically is a deterioration of the dollar. All right. So if we make $1 today, it's not worth as much next year, the year after, the year after. So we have to put our money that we have in excess into an investment of any sort to outrun the inflation numbers. Okay, so over the last couple of years, inflation's been like 5 to 9%. So we've had to have asset classes increase that much. That's why you see the stock market going up so much. So in the latter part of this video, I'm going to explain to you guys why the prices of homes and the prices of other investments don't have to go down. I wish they would. Like, for example, Bitcoin. I wish it would go back down to zero. Well, that's not fair for those out there that have bought now. So I watch that to see if there's an entry point for me to get in. Same with housing. Okay, so housing prices aren't going to go to zero. If you miss the boat, you miss the boat. Now you have to look at, when is a good entry point? And that's my whole goal here, is to help you figure that out. So let's go over to the captions that we have today. Right now, we have the payroll numbers that just came in. So I'm going to do like I usually do. I'm going to go over to CNBC and let them explain it to you. And then after this, we're going to put it into English. And then we're going to basically dig into these numbers so I can prove what they're telling you is actually facts. So without further ado, can you at CNBC please take the payroll numbers over?
Steve Leisman has the numbers right now.
Yeah, Joe, 152,000, a little bit below the expectation for the ADP, which is the consensus out there, but also a little bit below the estimate for the payroll on Friday. Take a look, 152,000 with all of the jobs, or the bulk of the jobs in the service sector, 149,000, just 3,000 in the goods sector. Actually, a big decline in manufacturing jobs. April ADP was revised down slightly from 192 to 188, and it's not been doing really a bad job, Joe. Errors are between 48 and minus 25, so in that range of plus or minus 50. Let's take a look at how we got there. Small business down 10,000.
Let me just reiterate, plus or minus 50. They mean 50,000. So that's how skewed these numbers are, just letting you know.
Medium-sized business up almost 80,000 and large business 100,000. Looking at it by industry, trade, transportation up 55, educational services, that's where we see a lot of the jobs in the BLS report as well, up 46, construction up 32, leisure and hospitality not as much before, and there's that decline in manufacturing jobs down 20,000. Interesting movements in annual pay. Job stayers getting 5% wage. That's still on the high side, but unchanged from last month. Job changers.
Now, this is an area where I'm going to get a lot of backflack too. This isn't from me, folks. This is actually payroll numbers from ADP. So this is what they're telling you because they're the country's largest payroll processing center. And so this is from them. So you might say, oh, Dan, I'm not making any more money or so forth. Guys, this is a national average, okay? Just because you're in one situation doesn't mean everybody's in that situation, okay? So I just want to clarify that.
Up 7.8%. That's down from almost 9% or above 9% in the prior month. It is down for the second month in a row. So we'll leave it there, guys. We'll see what it says about whether or not this suggests maybe a lighter BLS number on Friday. But it's been in the range, Joe, this ADP number.
It is, Steve. Stay right there. Let's bring in Neela Richardson, chief economist at ADP. Steve said 190 for Friday. Neela, is that sync up with what's reasonable in your view?
Yeah, I think it's going to be lower, Joe. Good morning.
You do.
This number is generally a good number, plus 150,000 or so jobs in most economies is a great number, but there is a little weakness under that hood. There's weakness coming from traditionally white collar jobs like professional business services, we saw loss, information services, we saw loss. We also saw losses and weakness tied to both producers when it comes to manufacturing and consumers when it comes to leisure and hospitality. That 12,000 jobs number is lower hiring than we've seen in the previous 2 months, which have been strong. So overall, it's a good number. It's not a great number, and there's some weakness that we're really paying attention to.
The Fed probably not unhappy with maybe a little bit of cooling in the labor market. Is that the right move, Neil? I mean, will this tighter environment bring inflation down? If it's not going to bring inflation down, there's no reason to try and hurt growth or the labor market. So I hope we get something for this.
Yeah, right. What's the point? I think we're looking to see whether we can coast with our steady hiring through the summer or if the economy is actually running out of gas. Right now, the coasting seems most probable if you look at the other data. But I will note that even in weak sectors like manufacturing, we've seen pretty strong jobs growth when it comes to job changers, up around 11% if you go from one job to another, even in manufacturing. Wage growth for job changers in May is still higher than it was in January. So the pay growth is still a big part of the story. We can't count it out, and we can't count out the role of wages of keeping inflation higher than we'd like it to be.
Can you guarantee me we're going to get to 2% in the next 2 years on inflation?
Not my job, Joe. Sorry.
What do you think, though?
She hits it right in the wheelhouse. So that was the perfect answer. So let's dive into the exact data that we have today, and it's right through here. So you guys paint this picture, okay? So on Monday, here's the numbers that we had. Manufacturing PMI, it was up. Okay, so let's just discount that for right now. We have manufacturing PMI in May. Okay, the ISM went from 49 to 48. We have manufacturing prices went from 60 to 57. We have job openings, okay, went from 8.3 million to 8 million, so less job openings. Now we have payroll numbers. Last reading was 188, expected to cool a little bit to 173. It came in at 152, and that's where we're at. And then we have these numbers coming back out, and we'll discount those. I'll come back to those maybe later this afternoon. But that's the data that we have right now. So what's going to happen with the Fed? You guys realize the Fed's meeting next week? Okay, so here's the FedWatch tool. We go to this, and it's telling us the Fed's going to meet in 7 days. So next week from now, they're going to tell us what they're going to do. What are they going to do? Well, the federal funds rate right now is 5.25 to 5.5. So here's what this tool does. What is the likelihood the Federal Reserve will change the federal funds target rate at the next meeting? Well, you go down through here, and there's basically a 99% chance they're going to do nothing. Okay, so now what's happening is the possibility of rate cuts is pushed out all the way to, what is this, August? August and September is the most likely events right now, and when the Federal Reserve will pivot. Only time's going to tell. But now let's get over to this. This is what I meant by, I'm going to get my head out of this equation. This is where it's going to get me a little, probably a lot of comments down below. People are making more money. Okay, so this is a chart of how much money people made over time. You get rid of the pandemic right through here, and it's pretty much not a bad signal. Now, no, it's not going from here straight up to here. There is some blips in the radar, but over time, this is what happens. So what do people do? They make more money. What do they do with their excess money? Well, they have to invest it because we have inflation to contend with. Okay, so what do? They go into things like this. They go into Berkshire Hathaway stock. Look at the Berkshire Hathaway stock. It was down here, and now it's up here. So no, it's not a straight line, but over time it continues to go up and up and up. Same thing with Bitcoin. Look at Bitcoin. This number's crazy, and it has huge volatility, but look where we were. We were down here, we were here, we were here, we were here. No, it's not a straight line, but it's a pretty steep curve there. So now let's go to here. What is this chart? I'm going to show you this. Kind of very similar chart to the rest of them. Goes up, little dips, up, dips, whatever. This is house prices. House prices, okay? So we're going to go through here. This is home prices, okay? So that's what happens. That's what I keep trying to tell everybody. House prices they don't have to plummet. Okay, just because it's like, well, the prices went up, now they have to come down. Well, if you go with that, you're going to have to say the same thing with stock market. Okay, the stock market's up, so much, it's going to have to go all the way back down to zero. No, over time we get an average, how much it increased over, year to year to year. You can take month over month, quarter to quarter. Look at year to year. You still have house prices on average, and people are saying, oh, this data is flawed. Well, if you look at 20 charts, there's one that says house prices are down, maybe two, but they continue to go up. Okay, so I'm not saying you have to buy a house. I'm just saying it's an asset class like Bitcoin and Berkshire Hathaway to a lot of people. To me, a house is a house. Okay, I love living there. If it appreciates, great. I'm not looking to buy a house and then have its value go down, but I'm not looking to live there and have I don't expect my house to go up, 20%, 30% a year. So that's just not how it happens. So that's that part of that equation. So let's get over to see how the markets are reacting to all this news right now. Let me go over to, where are we? I got to find my live charts right through here. So let's see, another number just came out. Geez, this is how volatile the market is right now. So we had the payroll numbers come in and it rallied all the way up to here. And then what happened is you're starting to get some of these numbers right through here. The servicing numbers and so forth, they're a little bit better. Look at this one. Business activities went from 50 to 61. I don't see that. Employment's 45 to that. So right through here, the manufacturing PMI in May went from 49 to 53. That's a big move. So it's pulling back all the gains that we got from the payroll numbers. So the markets are really volatile right now. So the MBS market, basically, we're going to just call it flat for the day. So mortgage rates will probably stay right around there. I'm hoping that we can get to 6.9 by the end of the week for more validation from the jobs market that things are coming down. We can validate that within the next couple of days, because on Thursday we have initial jobless claims, and then on Friday we have the government's numbers on the unemployment rate and payroll numbers. So we got a lot of data coming in the rest of this week. So if you're watching, if you watch me on a daily basis, or maybe Kyle Seagraves, you might want to look into watching us live today. We have a live event at 2:30 Central Time. We're going to answer some questions. And the main questions that we're going to answer today is, what credit score should you use? The first two steps that you should do when you're buying your first house. One, figure out what your credit score is. I talk to people every day and they're like, okay, my credit score is 740, and I pull it and it's 580. And then I talk to some people, it's like, oh, it's not too good. It's 620. And then it comes at 720. So it's not. So a lot of people, they think they know their credit scores, but they don't. So I created this website, Credit Scores and More, years ago, basically for two things. One, to show you guys, if you want a free credit scoring system, use it right here. It's right here. You'll click it. I think it goes to Credit Sesame or Credit Karma, Credit Sesame, and that's it. Sign up. But don't sign up for any of the bells and whistles, because all you need is the basics of this thing. But if you really want to know what your credit score is, that lenders are going to pull, lenders are going to use, you need to know what your true credit score is. What your credit score is that lenders use is called your FICO score. So if you click this, you're going to go over to My FICO. I would highly suggest, if you do this, you're going to want all three reports, because you want to know all three of your credit scores numbers, and it's right through here. So you can pick from a free service all the way up to the one with the most bells and whistles. That's completely up to you guys to do that. So check out what your true credit score is, and then the part two of that is we're going to go over how much can you really afford based on your income. It's like those videos you see. You need to make $500,000 in 2024 to be able to buy a house. Do you really? Do you really? Okay, so we're going to talk about that in today's video, and then answer the questions that you have on a daily basis, normally, that we usually go over anyways. So my name is Dan Frio. I'm actually a loan officer. I'm actually licensed in all 50 states as well as Puerto Rico. What other loan officer do you know that's a broker set up with over 30 different companies and licensed in all 50 states? Right here. So if you're out there, you're trying to find your first house, the first thing I'd ask you to do is hit the grant finder. This is going to find you some free money out there to see if you could maybe get some assistance there. But if you go through there and you go through the questions and you get a grant, well, go ahead and apply. If you don't get a grant, go ahead and apply anyways. I'd love to help you navigate basically from the keys in your, flip-flop that around. From the day you fill out the application to the days you get the keys in your hand, I'd like to be your mortgage advisor. So thanks so much for watching, guys. God bless. Don't forget to be on our live event later this afternoon. Hope to see you there. And if you like my videos, I'm going to ask you one thing to do. If you haven't subscribed yet, please do so right over there. Thank you so much. God bless. See you soon.